we saw a very sharp pullback, gap down, and then it's rallied back up. So this is a very good sign for silver. If we have a hiccup, a pause or pullback at the 618, we usually almost always go up and hit that 100% measured move, which is 106.25. So there's a pretty nice potential move here for silver based on the current price. That's about a 16% gain, and that could actually happen with only a couple trading sessions, the way silver is moving. So very bullish short term for silver.
Triple digits, has to happen. And, what that triple digits looks like is triple digits. Does that mean $100, $150, $200? I was listening to a fellow yesterday who was, thinking that silver is going to go to $300 to $600 in the next 6 to 12 months. Now, I've not heard someone being that aggressive before. That is kind of an aggressive forecast, but nevertheless, those are the kinds of numbers that we need to see in order to get this silver out of the ground. It's just not going to happen otherwise.
Silver is flashing a textbook bullish reversal with a sharp recovery from the 0.618 Fibonacci level, signaling an imminent breakout toward a 100% measured move of $106.25. This technical setup points to a rapid 16% gain, potentially unfolding in just a few trading sessions. Chris Vermeulen, Chief Market Strategist, and Keith Neumeyer, CEO of First Majestic Silver, emphasized that this move to triple digits is a structural necessity rather than mere speculation. Neumeyer argues that aggressive targets of $300 or even $600 are becoming increasingly realistic because current prices fail to incentivize production. He warns that without valuations consistently exceeding $100, the mining industry cannot afford to extract the necessary reserves, guaranteeing a supply crunch that forces the market to these much higher levels to unlock the metal. Now, we present the clips from Chris Vermeulen and Keith Neumeyer's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
When we look at the daily chart of silver, obviously, we've seen it just really explode in 2025 and so far in 2026. But there's a lot of high momentum here in silver. Just if we look at the amount of the volume has continued to pick up. We're seeing people around the world of all stature, all classes, like starting to buy silver, right? People are buying it at the post office. They're buying it at Costco. I mean, record amounts of silver is being picked up. So it is a hot commodity. It's becoming mainstream, the play to be in. And just looking at this chart, just using technical analysis, which you and I, Elijah, have shared quite often, is the Fibonacci extensions, which are one of my favorite tools. I find it is the most powerful and the most accurate tool to identify where the next level for price action is to move for any given asset class. So based on this run up that we saw coming out of October to this high capitulation peak that we saw back in December, and then we come back down to this low, this gives us an idea of two levels where silver should run into some resistance. The first one is this 618 extension. This is called the 61% move. This is called the golden ratio. This is typically where if the golden ratio level is reached and we see some volatility, which we have seen, we had a very sharp pop into this level. And then as you and I are speaking on this particular day, which is January the 15th, a Thursday, we saw a very sharp pullback, gap down, and then it's rallied back up. So this is a very good sign for silver. If we have a hiccup, a pause or pullback at the 618, we usually almost always go up and hit that 100% measured move, which is 106.25. So there's a pretty nice potential move here for silver based on the current price. That's about a 16% gain, and that could actually happen with only a couple trading sessions, the way silver is moving. So very bullish short term for silver. The longer term picture of silver, it definitely has some signs of warning when we zoom out on the charts. And I'll just kind of clear some of the drawings. We have this big capitulation, this big peak. I'm always afraid of things that go straight up because it usually means it's a crowded play. Everyone's buying at the same time. Nobody wants to sell because they like it. So it just means you got to pay a higher price in order to get some. And so we get these giant parabolic moves. That being said, I do feel like we finally have cleared that $50 mark. When we go back, we look at silver back in the 80s and the peak that we saw back in 2011, and we kind of just carry kind of that price action through here. I feel like, we've broken through that $45, $50 per ounce level. And I think we're going to probably see silver stay above this and dramatically above this as it keeps working its way through. So silver's on its way to continue to move higher. The big question is, when do we start to see a bit of a pullback or pause in this space? And at this point, we're not seeing a lot of signs of it just yet. We are seeing increased volatility. If we look at silver on the daily chart, it had from the high of one day to the low of the same day, it was a 15% move. And a lot of that actually has to do with the margin calls, the margin requirements that have been changed on silver. As it goes up, the exchanges start to put on margin requirements to protect themselves, to protect investors. And so that's created some of these big volatility sessions. But when we get big volume and we get an increase in daily price swings, it's also a sign that price might be getting a little bit overextended and might need a bit of a breather here soon. But at this point, we're still looking for 106 on silver as the next target. And then after that, it's probably going to do what we have seen many times before, which if we zoom out on the silver chart, it tends to rally and then take a breather, right? It'll move up and then it'll take a breather for a long time. Then it'll have a move up, pause, move up, pause. So I believe when we get up to 106, it'll have another big pause. And the big question is how does the price action move? Is it a pause before it goes a whole lot higher up to like 120, 125? Or is it a potential topping sign? We don't know. The nice thing about charts and using Fibonacci extension is it just shows us where the next target is. And we just have to manage our expectations and our positions based around that. So I'm very bullish on silver. It's exciting to see where it is, but got to be aware. I think, we got about 15% more upside, and then I think we could go into a multi-month pause, and then we just need to see if it's going to have a bigger correction from that point, or if it is just a pause.
And the only resolution is price, because there is metal in the ground, right? But it's all a lot of low grade material sitting in places, high up in the Andes or in hard to get places, hard to reach places, where roads have to be built. You need to build a port, you need to build electrical infrastructure, water infrastructure, you need to build a community in some cases, housing and alike. And, these are billion-dollar projects that take a lot of time to, you need the government on side, of course, to do it. You need to, and then once you get all that behind you, you can then break ground and start building. But you got to have the banks involved, and it's just I don't think most people actually understand the complexities in getting a mine up and running from start to first pour. It's very complex, and there's a lot of players involved that need to get involved in helping supporting that process. But the only way that's going to really take off, or if you expect to close the deficit, because we're running at, I think in the last 4 or 5 years, we've had a 650 million ounce deficit. So, those ounces are coming from somewhere, obviously, government hoards or investment hoards, or maybe some recycling, but it's not enough. The deficit, again, 2025, it's not published yet, but, year round, the same number as we have had in previous years. 2026 will be the same. So, how do you get these low grade mines up and running? It's all price. So, triple digits, has to happen. And, what that triple digits looks like is triple digits. Does that mean $100, $150, $200? I was listening to a fellow yesterday who was, thinking that silver is going to go to $300 to $600 in the next 6 to 12 months. Now, I've not heard someone being that aggressive before. That is kind of an aggressive forecast, but nevertheless, those are the kinds of numbers that we need to see in order to get this silver out of the ground. It's just not going to happen otherwise.
A convergence of technical strength and fundamental scarcity supports silver's parabolic rise. Technically, the recent bounce off the 61.8% Fibonacci extension signals a bullish continuation, with a 100% measured move targeting $106.25 imminent. This 16% upside potential is being driven by retail frenzy and massive physical buying, despite increased volatility from rising margin requirements. However, the longer-term driver is the deepening supply deficit, which has exceeded 650 million ounces over the last few years. The mining industry faces a complex reality. Accessible silver is gone, and remaining low-grade deposits in remote regions like the Andes require billions in infrastructure to extract. Consequently, triple-digit prices, potentially ranging from $300 to $600, are not just speculative targets but economic necessities to incentivize the production needed to balance the market. Let's get back to the interview.
Talk about what's going on in the silver space. It's a pretty epic move that we've seen over the last couple of months. It surprised me. I was expecting this move was going to take a little bit longer. I was actually crossing my fingers that we might see triple digits today. It'd be very, 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 it'd been fantastic to see that. We almost got there yesterday, got up to 93 and have a small little pullback today, but this is natural moves that we obviously expect. And, triple digits is definitely on its way. We hit $100 Canadian a couple of weeks ago. So
I saw that too.
I guess I'm partially right. But, look, I made that prediction. I was the first guy to create that phrase, triple digit silver, I think back in 2012, I think it was. And, I was highly criticized for it at the time. And, it took some time, obviously. I didn't realize it was going to take 13 years to get to where we are today. But nevertheless, it's great to be a silver miner right now. And obviously, I love silver. I put together a silver company 23 years ago for a reason, due to my thesis of the supply-demand fundamentals of the metal. And, obviously it's taken time but it's all paying off now. And I think it's just started. You see the demand for the metal. It's just a flood of buyers coming into the market, and it's mostly commercial buyers. And there is some investors and some speculators as well that are moving the market, but it's primarily fundamentally being driven by actual buyers of the physical metal for industrial purposes, which is pretty exciting to see. There's a squeeze in the physical market, and the problem we've got is that the paper derivative market is just so short the metal that now people are clamoring to try to cover their shorts, and there's just simply not enough metal out there to do that. So you see all these, I saw a bunch of March contracts got rolled forward over the last couple of days to January and February, which I'm not sure if I've ever seen that before. So you just see that all these guys that have all these paper contracts out there are just clamoring, and it's causing some issues obviously in the space. It's great for us, great for the miners, and happy to see that. But they deserve it. So I'm quite honestly, I'm happy to see it. Well, I came up with the phrase, I don't know, something like 15 years ago, calling silver a strategic. And I've been, go back and look at our PowerPoint presentations, that phrase, strategic metal, or there's no substitute for metal, or triple digit silver. These are all phrases that I've, me and my team have come up with over the last, several years. And, for the U.S. to, deem silver as a critical metal is really part of what First Majestic was doing. Like we were involved in that process. It was our team in Vancouver that was meeting with the U.S. officials on a regular basis. We had a team fly to Washington, and Hecla was involved, and there's a couple other mining companies that were also involved in getting that initiative going with the committee that was involved with that decision. And it was nice to see that they put silver on the critical minerals list. And I think that was, you go back in time and look when that announcement came out. And what that did, I think it woke up a lot of the institutions because, silver is kind of looked at as a poor man's gold. And I've been saying for over a decade that silver is not gold. Gold and silver, they're totally different businesses, very unique. And mining is different. Metallurgy is different. Recoveries are different. You go talk to a gold miner versus a silver miner, and you can, find out that there are definitely different businesses. And also in the case of gold is real, the granddaddy of all money. Gold is money. I don't look at silver as money. I look at silver as a strategic metal, as a critical mineral, and that's something we need. We couldn't have this call today without silver. And I've been reminding people of that fact for ever since I put the company together. And, for it to be now deemed a critical metal, I think that woke up a lot of people. I think that's got a lot to do with what we're seeing in the price currently.
Silver was to rally up to 106, right up to this level, 106 up here. a pullback, which is what happened in 2008 and those previous spikes that you said, they were big. They were 50, 60, 70% pullbacks. And believe it or not, you get that 50, 60% pullback, it brings us down to this $45 per ounce silver, which is a very big breakout point where price just exploded after. And I believe, that's potential downside in silver. I think gold could pull back 25 to 35% if we do have a big correction. Now, the big thing is you don't want to bet on what you think is going to happen, right? And that's what gets people offside. It gets them in the wrong positions or holding on to positions that are going against them. The key is you got to stay invested with the trend. You can slowly sell and lock in profits, trim off some of your positions, and that's what a lot of people are doing. And then the big question comes, Elijah, is like when we start to see the price pull back and chop around on the chart, say it gets up to 106, it's going to form some type of pattern, something. And the big question is it going to resolve and break to the upside and have a huge move and explode even higher? Or does it actually create a topping pattern and then start to break down? And if it starts to break down, that's where I step in and be like, okay, this move is over. I want out, and I will let it recalibrate, figure out how far it's going to pull back. And then when it turns around and builds a new base and starts to move higher, then I would get back in, just because I'm more of an active investor in terms of I only want to hold an asset going up. If it shows signs that's going down, get me out. I'll just buy it back later when it's proven itself. Nobody knows where it's going to go. And so we just have to follow these trends, let the targets get hit, let the price chop around and build a formation. And if it's a bullish formation, we hold tight. If it breaks down, it's a bearish pattern, I like to move aside because I expect I can buy it back at the same price or lower later when it's actually going to just, move in my favor right away, because that's the biggest thing. We can all make money back. If we lose 60%, we can always make it back over time. The catch is, and the real cost is the time. Nobody wants to wait 5-10 years to make back money. That not only that, but we can make a lot of money in 5 or 10 years if we just put it in assets that are moving. So I like the precious metal space. I think everybody needs to be long, but you do need an exit plan, and you need to know how to identify when gold is topped, when platinum, palladium, and silver has topped, because they can wipe out and give back a ton of your profits, and you could go dormant. You might waste a lot of time, and time is money. Gold's always my favorite just because to me it's the most accurate. The more I win more trades with gold than anything else, and I could put more money into a gold trade because it doesn't move 15% in a day. So I feel more secure with gold. It's slower moving. It is more of a global barometer of fear, so it naturally wants to keep moving up with less volatility, where silver gets a little more frothy. If we take a look at the gold chart, based on this chart pattern, we are looking for about $5,170, $5,200 for gold, which percentage-wise from where we are right now is roughly about 12%. So I really like gold. It's the boring play, but here's the thing. Boring things generally make money because, first, they're more consistent and you can rely on it. Second of all, if it's boring, you probably have a system or strategy so that it's not random. It doesn't feel like a roller coaster ride. So I like gold a lot. We're positioned in gold with an extra ETF play to take advantage of this run that it's in now.
The triple-digit silver thesis, a controversial prediction made over a decade ago, is finally materializing as the U.S. government officially designates the metal as a strategic critical mineral. This pivotal reclassification has shifted the buyer base from speculators to industrial commercial entities, creating a physical squeeze that paper derivatives can no longer contain. However, while silver targets an immediate breakout to $106, the technical outlook warns that its extreme volatility is a double-edged sword. A rejection here could precipitate a 50 to 60% washout back to historical breakout levels. Consequently, gold is highlighted as the boring, yet technically superior trade, with a more straightforward path to $5,200. Its lower volatility allows for larger, safer allocations, reinforcing a disciplined trend-following strategy. Capitalize on momentum, but remain ready to exit when market structure breaks to avoid dead money periods. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.